Hello and welcome to another video of the Simplicity Investment Watch. Today is March 31st, Monday. Obviously, if you've been paying attention to the markets, last 6 weeks have just been brutal. Uh, on the flip side, it presents some buying opportunities when this finally settles down and moves up, and there even might be a little bit of a sign of it from what I'm seeing on my Lucky 13 score for the markets, and also some of the, like particularly the candle formations for today, which I'll get into in a minute. So yeah, generally markets are sour. We know this. There's the threat of the U.S. trade policies and tariffs and all the unknowns that are connected with that. A lot of economic worries out there. Weaker than expected household demand came out last week. Consumer sentiment has been revised down to a low that's more than a 2-year low, and there's just sticky inflation data that just keeps showing up. So basically, it gets down to this where there's almost a 0% chance of the Fed doing a rate cut for their next meeting, which will be May 6th and 7th. And then put this all together with the inflation concerns and then a potential slowing economy, or at least there's concerns out there for that. But if you put that together, you have the makings of stagflation. So, but let's get into the Lucky 13 score for the markets. And before I do that, let's go over the disclaimer. Okay, our disclosure. We do not give financial advice, and this information is not for investment decisions. This is for educational purposes. The stock market is risky, and any trade or investment is expected to have some or total loss. The use of derivatives increases investment risk or potential loss. Do your own research before any trade. Please consult a financial advisor or professional to determine what is a suitable investment profile for you, given your investment goals and objectives. Okay, the overall market. So what you have here in front of you is basically with their corresponding dates is the Lucky 13 scoring that I've done for the market since early February. For those of you who may not be familiar, it's a scale that I have. I created it, and it's a scale that I have that goes from 0 to 18, with 9 being neutral. 18 being extremely bullish and 0 being extremely bearish. So you can see in early February we had pretty much either with the Nasdaq being neutral, but SPY, S&P 500, and DIA, which is the Dow Jones Industrial, were on the bullish side. This continued through till February 10, and then after mid-February it took the downturn where by February 25 sevens were coming across the board, which was a warning sign of the shift in the tide, and that should set the what I want to say, the theme or the tone for which you go into your investments. Obviously we talk mostly here at Simplicity Investment Watch. We talk about the covered call strategy, and you want to be careful going long when you have this shifting in tide. So when you see that, just change it from say a position where you're, if you normally were in a circumstance where you buy 200 shares or 300 shares, maybe you're only going to get 100 shares or 200 shares. You basically cut that in half, so you have a little more cash on the side, and I can explain how that cash can come into use once, say, you get into something and all of a sudden, hey, I'm down 15%, which is actually the story with some of the things that we're in right now. But I'll get into that in just a minute. But here we go now. So the March 31st is the bottom line there. And one thing you notice is from the March 12th readings that I did, there actually was a little bit of an uptick. This is encouraging. And I really feel that, the sentiment is changing despite what some of the numbers are showing. But this doesn't mean it's over by any means. A 5, a 7, or a 6 with 9 being neutral does not. It's still bearish territory. But there are some signs on the charts that maybe the market found a bottom or is close to it. So there's some optimism there, or some hope there. All right, let's get into some of the charts for SPY, Nasdaq, and Dow Jones. Okay, so SPY. Yeah, so obviously here's where all the ugliness came in, and starting back on February 19, um, we obviously went into correction territory. If you measure it from the top to the bottom, that's a little over 10% decline from the highest high to the lowest low. Um, and then there's been a clawback since March 13, and then last week was just another ugly week where it just fell down again. But what I was saying earlier, I put this trend line in here, and it broke the trend line on Friday with Friday's action, which was a very ugly day. But today was encouraging. So you have, first of all, you have the volume candle down here. So compared to Friday's volume, today's volume was a lot more. And this candle right here, let me change my, this candle right here, um, that's a strong candle. It the day started off ugly, but it pushed all the way back up throughout the day. So I was very, very, very encouraged by that, and you'll see this on a few of the other charts too. So this was kind of across the board where there was this early morning after the weekend kind of I'm scared, sell off, what have you. And but then buyers stepped in, which is basically the institutional buyers when you have this much volume out there. So they saw value. Someone saw value, a group, and started jumping in on this. So also, what I have on here is the anchored VWAPs, volume weighted average. As I customarily do, I'll put one off the high and I'll put one off the low, the most recent high and the most recent low. And although from the low on March 13th, the buyers were in control off of that low until Friday. But what was interesting is today is that it closed above. And if we can get a follow through day on this, we're back where buyers are in control off the low. And ultimately, what I want to get to, besides my Lucky 13 scores, I also like to see this pricing action get above this line, which is going to be a line of resistance on the way up. It's the buyers and sellers battle off of the high. So that's what we're looking for on that. But in any case, today I found this action encouraging, and let's take a look at the Nasdaq. So the Nasdaq, although it did not close up from Friday's close, it was another similar battle where it started off very ugly this Monday morning, and then fought back and ended up on the high end of the day, which encouraging. And as I said before, look at the volume candle compared to Friday's volume. This is more meaningful to me. This is more participants. This is institutional investors stepping in. So this is encouraging. I'm not calling a bottom, but it's something to watch for. If I continue to see more green candles than red candles and crossing this VWAP off the bottom and this anchored VWAP off the top, and keeping track of my technical score, my Lucky 13 technical score on it, it could be buying season again. So let's take a look at the Dow Jones Industrial. All right, ticker symbol DIA. So it's the ETF for the Dow Jones Industrial Average, and once more, great picture. Volume was more than Friday's. The, the candle's a beautiful candle in terms of starting off low and then fighting its way all the way back up. It fought its way above the anchored VWAP. Buyers have been in control since March 13th with the Dow Jones. On Friday, that was compromised, but yet today they fought back, and they fought back strong. So this, once again, just like I talked about with SPY and QQQ, another sign across the board that buyers are stepping in. Um, so this, and as I said in the Lucky 13s, the Lucky 13 score, they moved the numbers have moved from threes and twos to five, sixes, and sevens across the major markets. So, and this is showing it as well. And then the other thing we'll look at is the fear index, the VIX. So typically with the VIX, anything above 20 is in fear territory or high elevated volatility. Um, and if anybody's not familiar, typically these spikes in VIX correspond with lows in the market. So what we have is I drew this trend line off of this low from December and this January low, and the VIX has pretty much respected that line, as you can see, it, almost, I mean, just about perfectly right here on just this recent last week before everything went sour last week and the VIX just spiked. But as much as the candle formations for SPY, QQQ, and DIA were very encouraging, as I described, these long candles um, that started at the end of the day low and finished on a strong point, the VIX actually went as it typically does. It operates in the inverse to that. So the VIX started off very high, and then it just dropped all throughout the day. Once again, encouraging. We need to get it back below 20, and we need to break this trend line. But there's good signs here of potentially, as I said earlier, close to or finding the bottom. So. Okay, so that's the major markets from the technical side. What we have here in front of us is the major economic news due out for this week. This is brought to us courtesy of forexfactory.com, so credit to them. Um, but what so Monday, I filtered out some of the low-level economic news. There was some economic news that came out today, but it's not showing on here. I filtered this out for just the majors. Tomorrow, a particular note is the Purchasing Managers Index, so manufacturing PMI at 10 o'clock. Um, anything above 50 is showing expansion. We've had PMI, manufacturing PMI below 50 for years now. It has come above 50 a few times recently. In fact, last month it is showing this right here, right? So so that's going to be important for tomorrow morning at 10 o'clock. Yeah, there'll be eyes on that. The jobs opening, Jolt jobs opening report comes out. There'll be eyes on that, and ISM manufacturing prices. On Wednesday, ADP non-farm employment change. Uh, One of the major events of the week. Thursday, 8:30, unemployment claims, as they do every single week, and they're watched every single week. Expected to come in at 225. 10 o'clock is the services purchases managers into purchasing managers index. He's trying to say. So tomorrow's manufacturing. On Thursday is the services side, and that'll be closely watched. And then finally on Friday, there's a whole slew of information reports coming out that could be market moving, mostly for the unemployment rate. So that's a monthly thing, comes out that first Friday of the month, and that's all coming out on Friday. So average hourly earnings, non-farm employment change, unemployment rate, all of those things will be coming out. And as you can see there, Fed Chair Powell speaks later in the morning on Friday. So there's a fair amount of economic news that could be market changing or influencing. So just be aware of that when you're doing your trades, and you know what impact it could potentially have on what exactly you're trading. All right, so that'll be it for today, for at least for this segment. I'm changing my format a little bit for those of you who've been watching. I typically do a video where I go through the market updates and and just talk about the macro markets, and then I move into uh, my bull list and my bear list, and then finally showing some potential or options to consider, covered calls to consider with that bull list or that bear list. Um, It ultimately turns into this 30 or 40-minute video. I figured I'd try this a little differently and just cut it down to like these 15-minute segments to make it a little more appealing to watch from your side. So that'll be it for this video. I will put up another one shortly for the buy list and bear list. Keeping in mind that the market's not favorable, the tide is out, so really there's not a lot to do unless you're on the short side of things or if you want to go with some put strategies. And I do have stuff on the bear list to consider. But that said, that is it. And I want to thank you all for watching. Please click on subscribe. And if you have any questions, you can get to me through marketsimplicityIW.com. And just remember, simplicity is the ultimate sophistication. Keeping things simple is really smart. All right. Have a great one. Take care. Bye.